Hey everyone, we got some massive news for Intel stock investors regarding export restrictions from the US to China. I'll go into detail on what those restrictions are and precisely how it's going to impact Intel's business. I'll also go into detail on how that's changing my outlook on Intel stock, if it makes me want to sell the stock, or if the drop in price, because the price did drop after this news was announced, if that price drop makes me want to buy the stock even more, or if the restriction outcome outweighs the drop in price. So I'll go into all of those details and discuss and elaborate on that. And then I'll update my recommendation on Intel stock. So let's get into the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so going into this update, I did have Intel stock rated as a buy. I last updated this recommendation on April 26th, where I said Intel stock I think is a buy. I thought the risk versus reward was worthwhile. Now you can see it's not one of my favorite stocks, right? I have stocks that I have rated higher than Intel, but it's just one stock in among many that I think offer investors a reasonable return expectation. Now, the latest news out of Intel. On May 7th, the U.S. Department of Commerce informed Intel Corporation that it was revoking certain licenses for export of consumer-related items to a customer in China, effective immediately. As a result, the company's second quarter revenue to remain in the original range of between 12.5 to 13.5 billion, but below the midpoint. In other words, what Intel is saying is they were informed by the government that they're not allowed to sell to a certain customer in China. Effective immediately, they can't sell to that customer anymore. So looking at what Intel told investors, which they told investors that for the second quarter, they're going to deliver sales between 12.5 to 13.5 billion. So the midpoint would be 13 billion. But now what they're saying is that the midpoint, the revenue is going to be below the midpoint. In other words, they're bringing down the top end of that guidance, saying that they don't think it's going to come in at above that higher end of guidance. So you can think of this as the new guidance being downgraded. Instead of being between 12.5 to 13.5 billion, you can look at it as being between 12.5 to 13 billion, because the company's saying that the second quarter revenue is going to be below the midpoint. So 13 billion or below. That's essentially the new forecast, the new guidance from Intel for the second quarter, chopping off the upside by 500 million for the upcoming quarter. For the full year, the company continues to expect revenue and earnings per share to grow year over year compared to 2023. So they no longer can sell to a specific customer. It must be a very valuable customer, because otherwise it wouldn't impact Intel's sales by up to 500 million in the upcoming quarter alone. And so Intel downgrading that outlook going forward. Of course, the reaction from the stock would be negative to this news, right? This is not good news. This is negative news. The stock price is down 2.63% on this news. Okay, that's, I think, a justified reaction to this news, because the company's sales and subsequently profits are going to be a little bit lower than expected for the upcoming quarter, less than 5% lower in the upcoming quarter. So a price decrease of 2.63%, I think, is appropriate for the magnitude of the impact to the business from this result, from this update. Now, at the same time, we know that Intel is getting significant benefits from the US government. So it's like the US government is giving Intel on the one hand and then taking away from Intel on the other hand. In the latest quarterly update, Intel told investors that the US Department of Commerce has proposed up to $8.5 billion in direct funding and to make up to $11 billion in loans available under the CHIPS and Science Act to help advance our manufacturing and research and development projects in Arizona, New Mexico, Ohio, and Oregon. So on the one hand, Intel is getting billions of dollars from the US government. On the other hand, they're getting these increases in protectionism from the US government that's going to restrict Intel's sales for the next several years, most likely. I think net, the benefits outweigh the restrictions. The billions of dollars that Intel is getting from the US government in grants and loans outweigh the difficulties in export or the export restrictions, which, to be honest, were probably naturally going to happen anyways. The Chinese economy and the US economy is becoming more and more protectionist, meaning the Chinese government is encouraging its local companies to purchase from within China and to lessen their reliance on US based companies. And the US economy, the US government is doing the same thing. So even if these restrictions weren't mandated by the US government, the market itself was starting to move in that direction because the market can anticipate the growing protectionism of both these countries. And they're trying to decouple themselves from each other, trying to lessen the reliance on each other. And I think overall, the Chinese economy has more to lose from decoupling from the US economy because US consumers buy so much more stuff from Chinese manufacturers than the other way around. So the dependence is strictly one sided. Well, I shouldn't say strictly one sided, but it is. Uh, the benefits are flowing more so to China than they are to the US. So this decoupling is going to hurt Chinese companies even more. And they are responding in a tit for tat manner because the US government is making these restrictions, right? So the Chinese economy, the Chinese government is also announcing restrictions and trying to send a message to the US government saying, if you make these restrictions on us, we're going to place more restrictions on US based companies in a kind of negotiating tactic to try and stop this trend of the direction that the US government is going. So remains to be seen how this evolves, the US versus the China, the decoupling. But in terms of Intel specifically, it wasn't good news, but this news wasn't a big surprise. I think market participants have been anticipating these types of moves. So now Intel is trading at a forward price to earnings of 14.78, even cheaper than where it was when I last recommended the stock as a buy. So even after this news, I'm reiterating now my buy recommendation for Intel stock today on May 8th. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.